Hey everybody, it's me again, Adam Chapnick with the Security Token Academy, and we are here at Security Token Industry Launch Week, and I am joined by none other than Oscar Joffrey, the co-founder and CEO of KoreConX. Thanks so much for being here.
Thank you, thank you.
So, KoreConX, some people know of you, some people don't. For everybody who's watching who hasn't heard of you, tell us, what is KoreConX?
Great, thank you for that opportunity, I really appreciate it. KoreConX is an all-in-one issuance platform to help issuers launch a fully compliant security token around the world. And along with it, we provide a platform that has additional functionality to manage the life cycle and all its corporate actions, cap table management, investor relations, regulatory reporting, access to additional capital raising, and more importantly, to keep them compliant. We are also a transfer agent in over 7 different countries around the world for private companies only.
See, that's terrific. That's a term that people sometimes encounter a little too late, and they don't know that they need it or they don't know what it is. Can you just, for everybody watching, just define what is a transfer agent, why is it important, why is it essential in this process?
Great, I mean, you often hear that we're custodians and they get that mixed up with cryptocurrency, but we're more than just custodians. We're the book of records for the company. So if there's ever a transfer, a sale, a movement of that security or an action within that security, it's our responsibility to make sure there's a book of records for the shareholders to be able to have a transparent way to be able to report to them. For the board of directors to have confidence that these are the rightful holders in their corporation, and to make sure that there's no monkeying around with a cap table going on. And more importantly, to make sure that when trades are occurring or any activity is being done within the regulations that is allowed within the regulation that you raise your capital in.
Yeah, it's a really important protection for the investors because they don't get to know what is happening once they've bought the shares. They just know that they did, but they don't know what happens next.
That's right. Even though they signed the subscription agreement online, how many people read the 100 pages, right? They just get the bullet points. You know, maybe it allows you to do this, and that, but people don't actually read the fine detail. And it's the details that actually, down the line, they go, hey, can I do this, can I do that? Well, imagine all that embedded in a immutable smart contract like ours with artificial intelligence that actually knows how to respond to make sure that they know what they can do with it. So when they go to a secondary market, it knows how to act. It doesn't need to go back, hey, Oscar, can they do this? Yes, of course. It's automatically done for them. So
this is actually interesting. I don't get to drill down on this almost ever. So if you wouldn't mind, can you talk through some examples of like, what are some things that someone might say, is it okay to do this? Like what, for example, what? What are the things that a transfer agent can say, yes, you can, or no, you can't?
The most common question we get today, because we deal with real world companies today that are raising capital in the private world, on an average 15, 20 questions a day. I just got this share, what does it mean?
Okay, that's pretty wide open.
I know, it's okay. Do you know who the CEO of the company is?
Oh, God.
I mean, we're talking some basic. The other one is, so who can I sell it to?
Okay.
That is often in the top 3. Who can I sell it to? Then this whole notion.
Sorry, before you tell, that's an important one that I've seen play out in good and bad ways.
Yes.
So in that case, for example, if someone says, who can I sell this token to? Sometimes there are restrictions, sometimes there are fewer, sometimes there are more.
Yes.
How does a transfer agent make sure that nothing bad happens?
In the current world, without tokenization, it's all manual. Now, you embed all of those requirements, and it has to be something extremely smart to make sure that it meets it. The transfer agent is the checks and balances. We're, again, the custodian. We're making sure that, yes, okay, that's great. It's great that you read the core contract and it said that this individual fits the KYC, they're coming from that country, they can buy it, so forth. But we still have to double check it. It's one thing you telling me, I'm the one that finally said, add it to the cap table. Once it gets added to the cap table, I can't just erase it. It's not that simple, right? Now I have to have an audit trail. Ooh, we made a mistake. We accidentally added you as a holder and you shouldn't actually be a holder. So it's a combination of 2 things. It's combining the element of making sure that it gets done properly, but you still need the last check. Now, that can be completely electronic, digitized per se.
Yeah, but only if you know what you're doing. I mean,
exactly.
You have to be
Thank you.
Yeah,
you need to know, right?
Right.
Let me give you a perfect example of this. I mean, it's great that we're here in the United States. This is fantastic. But I don't know any token that's only sold in one country. Have you?
Right. Not yet.
Not yet. Exactly. We all want to sell global, right? The equity crowdfunding on steroids,
yes.
right? So here it is. We want to sell securities in multiple jurisdictions. So what happens when you sold a security to different holders in different countries? How does the security work at that moment?
Yeah.
Right? So yes, the token can make sure it meets all its requirements, but you still need somebody to double check it at the end.
Wow.
Because once it gets added, that's it. Right?
Yeah. So did you bake your own token that you proprietarily put together, or have you had, cobbled together a couple other ones, or do you use a third party, or a mixture of any of those?
Yeah, that's a good question. I don't want to use the word proprietary because we are our core protocol is going to be available for companies to use to launch their own. We have no mining in our protocol. We didn't want to have any gas prices to it. We wanted to make sure when a security was given to a holder, there'd be no liens on it, there'd be no restrictions whatsoever. Our protocol is now being adopted by broker-dealers to help companies raise capital. We're now working with 4 secondary markets that are regulated in the United States and Europe to be able to trade. So we're an alternative to what's been normally been discussed. Ours is based on Hyperledger Fabric. We felt that as a regulated entity, we needed something that we could bring confidence to the market. Today, what people don't talk about is that when investors are making investment on public chains, the smart guys know how to hack. Right. They know how to, they call it leakage. Now, I want you to understand something. On a utility world, leakage is acceptable. Yeah. Under securities law, no leakage is acceptable. Right. So where did the 2 million go? Where's the 2 million? According to you, you invested, but the money's gone. So we needed a chain that would no longer be acceptable in the public. It's permission-based. It's not exposing the investors. It's bringing investor protection. It's keeping everybody in the ecosystem compliant. And not only that, it's cost-effective. We're not talking $150,000 to pay developers to mine and stuff like that. We're talking $10,000 and you want a billion token or you want 10 billion? Right. How many do you want? Right? It's irrelevant. It's about democratizing capital, right? And you have to remove all the barriers to it. Technology is a great vehicle, but it's not the end all sometimes.
Right. No, absolutely. And especially in the regulatory environment, you need people who can be compliant, or else there's a lot of bad stuff that can happen.
Exactly.
So that's not a joke, and leakage is not a joke.
It's not a joke. Right. I mean, one gentleman here told me, but Oscar, it's acceptable. I'm trying to tell you, in securities law, it is not acceptable. Right. And they've accepted it. They actually have a line item where they're willing to take the capital to compensate the leakage. Oh boy. If you do that, I don't know how to do that.
Consequences, let's just say. There are consequences.
So what I will say is this, it woke up those that were sleeping. It woke up the industry, it woke up Wall Street, Bay Street, it woke up all the streets around the world. Everybody's awake. To think for 1 minute that institutional investors, family offices, asset funds don't want to they want to participate, but they want custodianship. Right. I said it earlier today, custodianship is the key.
Yeah, okay, so let's shift a little bit. Now, KoreConX, who are the people, who are the constituents that you're serving? Who's your typical client, and if they're one way now, who do you expect them to be next year? Are they the same? Or?
Yeah, that's a good question. So up until now, about 98% of our client base is all American companies, Reg CF. Okay. We work with platforms like Republic and a few others, Reg A Plus and Reg D. So these are companies that are doing traditional capital raises, and they're smart enough to say, hey, we would like somebody else to help us manage our corporate records. We provide a portfolio management to their investors, but now we've opened offices in Australia, Singapore, Dubai, and now we're expanding that even further. Will the largest makeup still be the United States? It will be. To date, there's still more capital raising being done in the US than anywhere else in the world. That is that is reality today.
We're the cowboys.
We really are. We really are. People say, Oscar, look at Malta. I go, that's fantastic. 145,000 companies raise trillions of dollars in the United States. Oh, wow. That isn't changing.
Right, amazing. Right. So do you see any sort of trend in terms of the types of issuers that are coming around, in terms of verticals? Is it any certain kind of company versus another, or is it just sort of a wide array that there's not really a signal in the noise yet?
Yeah. Do you recall the crowdfunding days?
I am from the crowdfunding days, yes.
Okay. So in 2012, we all thought it would be early stage technology companies.
Yes.
In Orlando, we got a massive surprise by a gentleman by the name Rodrigo Nino from Prodigy Networks.
Oh, right.
Rodrigo stood up on stage and he had raised $680 million
in Colombia or something?
From Colombia,
right, yeah.
in real estate.
Right.
So I guess what I'm telling you today, we don't know what the asset class will be yet.
Right.
And that's the opportunity. But from our perspective, today we got over 50,000 companies on our platform. They come from biotech, technology, cannabis, real estate, film, funds.
Wow.
For us, we're agnostic.
Sure. Oh, it's exciting. I just like to hear from people who get the view I don't get, to see what's the use case, who's using these things. So what do you think about, say, in your crystal ball looking 18 months ahead, where do you think this security token phenomenon will be? Will it be kind of still fighting through, figuring out clarity from the regulators, or is it going to be off to the races?
As far as regulators are concerned, clarity is there. It's a security.
All right.
There's no argument on that end.
Okay.
That's Canada, US, Australia, and a few other countries are following. So that, for many of us, it's already there.
Great.
As far as in 18 months, I see institutional inside. That's the key.
Got it.
We never got it in crowdfunding because we couldn't give them the comfort of the security and the magnitude that this has. Now we do.
Do you think that has some, but don't you need to comply with the same caps for, would you be fundraising within a CF or an AA plus things like that, or no? Is it, we're just going to not go do that?
No, I mean, all CF
Reg
will
D.
still, I think Reg D will benefit the most, and Reg A plus. If Reg A plus gets shifted from 50 to 75 million, that's another game changer, right? But Reg D is going to benefit the most, because we're going to see that kind of money that typically doesn't come in as early as it does, but it will come in. Real estate definitely will be one. I mean, you're definitely hearing that buzz already.
We just had a $30 million building in the East Village tokenized this week.
That's right. So you can instantly get it, but tokenizing one thing, now liquidity.
Yes.
So we've spoken to Mr. David Wheel, who is an advisor in KoreConX. Yep. We believe that in order to get true liquidity, you need the retail. But if you don't get the $36+ trillion of that's sitting out there right now on the institutional side, liquidity will not happen.
Right.
So we're working to solve that problem, and that's one of the reasons we chose Hyperledger Fabric as our chain, to make sure that we could glue ourselves into the infrastructure that needs to have trust. Remember what I said, investor trust is everything.
Everything. Yeah.
That's it.
I got it. Do you want to talk a quick moment about what the benefit of Hyperledger Fabric is versus other things?
So from our perspective, being a regulated entity as a transfer agent and having broker-dealers that are regulated, we needed a chain that we could make sure that all the information, from a securities law perspective, could be properly managed, immutable, true immutability, no forking.
Got it.
Okay, so
there you go. Well, that's
okay. There it is. I go into a room that I would never be allowed in, right? With bankers and Hyperledger. Good, no forking, right?
Done.
No forking.
Right.
So that adds. Those are the big points. But the big surprise was that this year, IBM and Hyperledger, they're starting to expose the 700+ installations. When everybody thought that the Goldman Sachs, JP Morgans were asleep or were actually doing plain sandboxes, well, I want to tell everybody, these 700+ installations, they were working on it, implementing it. So they're inside. So they're working.
Wow.
So now we need to plug ourselves into that. And it could be Ethereum based. I'm not saying, for us at this time,
right now,
we felt this was the right chain to solve our problem as a company and make sure that, and we're not an island. We're never going to be one. We're not a broker-dealer. We're just infrastructure, and we just want to make it available to everybody.
Amazing. Well, we are big fans here at the Academy, and please, we hope you'll come back soon and often and keep us posted on what you're doing. Thanks for joining us.
We certainly will. All right. Thank you.
Thanks, Oscar. All right.